All right, traders, what's happening? Jamie Sedley here. This is the Midweek Strategy webinar with SB Trade Desk. And before I dive into the charts, let me know that you can hear me. Oh yeah, Pooja, what's up? She says, lucky I saw your tweet. You're having the webinar, so I stayed up. It's 1 a.m. here in Dubai. Well, let's run through some charts then, shall we? All right, so we are going to go, let's just kind of start with the dollar. You did see yesterday's post about the US dollar, this specifically the FXCM one. And as I wrote yesterday, we are going to get that DeMark sell signal today on Friday. So a little quad witch action. Last day of September is actually Monday, but we are going to get tomorrow's Friday, right? You get the big last Friday quad witch stuff. So let's see if we can get maybe a big turn here on the dollar. As noted, you've had some pretty reliable DeMark sell signals and buy signals for that matter. You know, sometimes right on the high, sometimes maybe a little bit before, but we are going to get that. And again, if we scroll back, just look at the longer term chart, right, of US dollar. You know, we've been brushing up against, it's just this big trend line here, okay, from 2011 to 2014, right? That line, can zoom in, you can see some of the important touches as support, resistance, 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 resistance. And this is what we call, you see what's happening here? This actually, you can think of it like divergence with RSI, okay? So you don't get all the way up to the level, right, on that last attempt here. So that is what we call, you're leaving a space, right? I don't like to say gap because that would be confusing because gaps are a whole nother deal, but that is kind of what it is, right? So you call it a space. You're leaving a space here, tells you that the market's not strong enough to get to its resistance point that it's hit so many other times. So, you know, we'll see. It's not to say that you can't go bonkers here. I've obviously been looking for the dollar to roll over for some time, and it is super frustrating, but such is life in the markets. And, you know, bottom line is we do have this space here. So let's see if we can get that DeMark sell signal today, Friday, and then see if we can head south in October. Moving on to, we can look at DXY as well, which same deal. We are right on the DeMark sell signal here as well, right? We're on a 12. So this one, you might actually get it on Monday. We are also back on the level from the low from Feb 2017, right? And then if I scroll way out, get rid of that, right? This magenta dotted line here, connecting July 2012 and the May 2016 low, right? Resistance here, resistance here, resistance here. Just missed it back on the first day of September, and now we're very close to it again. So, same idea, right, as US dollar. Moving on to euro. Yesterday's chart, again, more divergence today, by the way. And we're right on the level. So again, this zooming in on this, you've got about 108.95 right here. And the lower parallel right here is going to be about 108.90. But if bottom line is, I mean, we're splitting hairs here. I mean, the ranges are so small that it's easy to split hairs and talk about 5 pips, but it's kind of pathetic. So bottom line is kind of like, see if we can maybe tag 109-ish and then turn up. I do know that I think yesterday DSI on Euro is 15. Don't know if you need like a big nasty drop before it gets, you know, single digits. We'll see what it is later tonight. But I am looking for Euro to turn up out of here. Again, all the divergence, but it's been going on for a long time, obviously on the weekly as well. You know, just to give you an idea here, weekly chart. I mean, look at all of this divergence. It's been divergence almost continuously since October 26th of last year. And I know we've talked about this a million times, but clean this up so you can see it, but it gets the point across that we've had nothing like this ever. I mean, you had a cluster of divergence back here in 2005, right? And that obviously preceded a giant rally. DXY is a little different because we've got more data there, right? This TradeStation data only goes back to euro, not pre-euro, like synthetic euro, Deutsche Mark. But the clusters that we've had in DXY, I mean, back here, 93, 94, or 93, excuse me, 98, which is kind of what I was comparing things to before, and we just haven't, it just won't do anything, right? I mean, it's just stationary. So, we've had these clusters that have given way to fairly violent reversals, especially the 98 one. Is it going to happen here? I don't know, but it's that the shape of this, I mean, no doubt you've got just a wedge with all this divergence. This is the kind of thing I thought we put the top in here in early September when we traded up through it and back down. Obviously, it was not to be. We had signals out the wazoo, reversals, volume, blah, blah, blah. It's just nothing, right? So I don't know what makes this happen or what the supposed news or that makes euro finally turn up and dollar turn down, or maybe I'm just completely 100% off base and the dollar's going to soar. But that's not where my head's at the moment. So bottom line, we're looking for that low near 108.95 in euro. All right, cable. Let's make a simple naked chart here of cable. So what we want to do, all right, daily chart, okay. It's all about the channel from back here in April of 2018, okay? So just draw your channel. Do I have it off of this one or this one? That's probably a little better. All right, so the channel here, the median line, super important. I don't know if you get there, but if you do, man, that would be a heck of an opportunity because it's also the 618, right? So call it 122 if you wish, 120, 197. What I'm also got my eyes on though is, and this is very much just kind of watching and waiting, but the 200 average on the 4-hour chart, right? That's going to be 122.70. That's going to be closer to the 50%. And generally speaking, you have had periods where during trending periods where you've kind of followed this average pretty well. Didn't hit it back here in late 17 and early 18, but you did here, right? Feb 2018, right? You did here, right? On the way down throughout 2018. So it's like during these strong kind of, trending moves where you get decent sized corrections in British pound, you do, we've seen a tendency for kind of the 200 average touch that's when you want to really think about, going with the prior move, right? So rally pullback, that's what I'm thinking there with cable. Other reasons too, I mean, really long term, right? Like if I pull up COT, for example, we are coming off of some really extreme readings with commitments of trader. I'll show you that here. So here is the positioning with COT, and you can see the difference between speculative and commercial positioning. We haven't seen it this extreme except for back in March of 2017, and that was obviously a huge, huge opportunity. In fact, it was like right on the nose, right? Like right there. Okay, and then obviously preceded a hell of a run. So have we seen that happen already? And are we, is it time to buy dips? It's kind of what you have to ask yourself. While we're on COT, don't want to forget about the New Zealand dollar, which again, we've only seen at this extreme back at the low in October of 2018. So same idea there. All right, so euro, don't forget about the IDO search stuff from yesterday too. I take a glance at IDO every day, but I just haven't done it or presented in a while because there hasn't been much to share. But there really is right now. In fact, why don't I finish going through some of these charts, and then we'll take a quick look at the current IDO readings. Dollar yen, you know, zoomed in really short here on an hourly, counting 5 down, 3 up. Let's see, 108 to 108.05 is kind of what you're thinking. Again, sounds like I'm being a kind of a dick for a tick here, but 107.96 was where we printed late in the day. Could that have been it? Sure. Might as well let Asia get underway and see what happens. If we start to turn down pretty good, then we might just have to chase it lower. My thinking here is that dollar yen heads towards dollar Swiss, also resistance, by the way. My thinking is that dollar yen let's get rid of this text. Okay, let's go to the daily chart. My thinking is that initially dollar yen heads towards right here, right, 106.50, 106.60. In fact, if, let's just say for argument's sake, that we do get the exact 108.05 level, which, you know, again, sounds ridiculous, but whatever, let's just say we do, then you have 2 equal legs right at the median line, okay? That would be your first target on the downside. Let's not forget the bigger picture on this as well. It's easy to forget the bigger picture when you're looking at hourly charts, but don't forget we broke the trend line back to Brexit. Okay, we came back and tested it as resistance like 3 times, and then we fell out of bed the day after the Fed meeting in August, right? 7/31, August 1st, trading day. You got to move down, a move up under the 200-day average, which is a whole nother deal to talk about, right? Here's that 200-day average, extended rally into the 200-day average. So what these signals are, I reference them every once in a while. The blue signal, okay, is going to be when you have an extended drop based on 9 bars down, but you're within 3 standard deviations of the 200-day average, okay? The red dots are the exact opposite, right? 9 bars up. Again, this is not 9 up days, it's 9 bars closing above the bar 4 bars prior. So it's just a sustained move in one direction, okay? Now during trending moves, right, like over here, you get super entries. Over here, which was, I believe that was the NERP in February 2016. But when you have periods like this, right, like we've had over the last couple of years, this is not going to work. You're get just murdered. And you know, my contention is that maybe we have, excuse me, maybe we have changed market conditions somewhat, right? After getting the, you know, the break in the tag here, right? Now, maybe we have actually changed. I guess you could say maybe we go for another run here. I don't know. But, you know, the short-term pattern's clear enough for me to look to take a stand against 108.50 into 108, right? You do want to see, I think, like a, you know, a reaction. I'm not leaving an order at 108 or anything to short. I'd like to see the market do something up there tonight or whatever before going in. All right, we can continue to go back on this. When you get these bigger trends that get underway, right, get some really good signals. I mean, even over here, you'd have a sharp drop, right? Sharp drop. So we will see if this plays out, if we have indeed entered some sort of a sustained down move for dollar yen. I will say that and you get in trouble doing this, but we'll look at gold in a little bit. And Gold doesn't necessarily, you'd like to see gold be in a very bullish position right now, and I'm not so sure that's the case. We'll get there, so let's not get too far ahead of ourselves. Looking at, okay, there's that. Looking at Kiwi, I mean, just keep it real simple here. We got the COT stuff. Big update today. Would be really annoying if we turned up from here, because I'd love to see us try to tag the trend line, take out that 2015 low, and then try to do something on the upside, right? You've had single digits DSI and Kiwi as well, but yeah, a lot of good information suggesting that we should be contrarians here when it comes to the New Zealand dollar. Aussie, not so clear to me at all right now. We had the 96, 98 thing, remember? Or sorry, 98, 2019 thing. I thought we had a low in the other day. Did not happen. So the only thing I can give you on Aussie at this point is if we do turn up into, where's Aussie? Here it is. No volume levels over here to speak of. We had a reversal here yesterday on the hourly volume. All I can really offer here with Aussie is that we just need to start making or stop making lower highs, basically, right? Just keep it simple here. So yeah, I mean, I'm not going to talk about Aussie because I got nothing to say. Dollar CAD, torn here a bit. Under the 200-day, just a complete choppy mess for essentially last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. You could still go for this trend line and daily reversal resistance. Again, daily reversal resistance is the high bar in the close of that. And that's going to be up around 133.40. It's also the 25 line of this fork, which of course was resistance back here on 9.3 and resistance back here in June, okay? So if you get up there, great. If we start to roll over beforehand and there's some sort of short-term pattern or reason to short, we will. Maybe a little bit. This goes hand in hand with crude. I'm not sure that's what we're going to go to right now, though. So let's take a look at crude oil. All right, so here's crude right now. I don't have a strong opinion on whether or not crude heads higher from here, but I will say that it's a, at minimum, at least a high reward to risk situation with for bulls, right? I mean, essentially, you had the reversal day yesterday. You came back today, took that out, tagged the line that crosses every low since August 7th. I mean, you got to be a bull against today's low, right? These two bars here, 200-day average, below, closed above. You've also got the top side of the former resistance line. So, this could be maybe a catalyst, if you will, if you want to go there for Canadian dollar, but the correlation's been a bit out of whack. So let's actually look at Canadian dollars and crude oil. So you can see at times you have had it this year, early in the year, then nothing, period here in June, right? And we started to get a little more back into kind of traditional correlations, right? This was the move. This was the Saudi, right? The Saudi news here. So CAD didn't do its thing there, but we've kind of now we're reconnected. So, maybe this is a catalyst. I don't know. I like the crude chart. I love being long against today's low. Canadian dollar itself, not as clear, but just wanted to bring that up as a possibility. And we, by the way, still are in a bullish seasonal mode for crude oil for about the next 2 weeks. So maybe we get something there. All right, let's look at the metals. We're gonna look at gold and silver. So this is what I was talking about with with Japanese yen, okay? So during the super strong phase in gold earlier, right, and bonds for that matter, we didn't have much of a move really relative to those things in the yen, right? FX has just been dead. Rate differentials are nil. Not a lot of reason for money to move around. But technically, looking at this chart, you know, the question I posed in today's update is this, are we making a big consolidation top, right? Head and shoulders of sorts, or is it just consolidation before we go higher? I was saying I will attempt to answer that question, or let the market answer that question, after we get down into this zone here. You can see these two parallels, right? Highs, resistance, resistance, resistance. So you want to see what the market trade, what it looks like between 1460 and 1480. 2 legs down is 1469. So that would be, you know, your ideal level to watch or pay attention to. Okay. You know, it could be a thing where you get a little rally and, you know, dollar yen trades off some, and then you have another pop in dollar yen, and we go to the final move down here in gold, and then they can do their thing. Again, you have to look at each market based on its own technical merit, its own information. But if this is a giant top in gold, it's somewhat unlikely that dollar yen is going to fall, you know, through the floor. So just wanted to bring that up. Silver, same idea as gold from the sense of, you know, is this a big top up here? You know, we've already pulled back substantially. You have to have levels where you're going to think about support. Really, the 38.2 of the run up from May and these old highs from 2018, that's going to be 1736.44. Okay, it's also the top side of the former corrective channel, right? Get an arrow over here like that happened, right? So if we can get that precise touch and turn up, then you're good to go on silver. Otherwise, I would be careful, because silver could come all the way back to kind of this 1679 area and still be a broader, bigger picture bull, okay? 1 second, hold on. Okay, sorry. So there's that. All right, let's take a look at some indices. All right, Qs. Perfect trend line touch, nothing but churn, right? I mean, there really is not much to say or do until you break on the Qs, at least break below this trend line that goes back to the June low, okay? SPY, same idea. Kind of in trading, I was talking to a guy earlier today, I said we're kind of in trading purgatory, right? Until you can either break out through here or break down through here. And that's a pretty big range. I'm just saying, like, don't sit here and try to force the market to go somewhere when it's not doing anything. So really, you know, it's the trend line again from June, really, is what you're looking at. You can probably go over here, be a little more precise. And that's going to be, if, you know, you get down there, you get 289. That's the low from September 3rd. So essentially the September low, the 9.3 low is your spot. Now, bigger picture, I guess you could go to new high and still fail. Remember the really long-term chart in the fibs, right? Fibonacci expansions of the 2007 and 2009 drop, right? 127.2, 1618, 2618 is the next one, and it's 303.82, and we have printed a high the other day of, or last week, of 302.63. So pretty darn close, and you've got this trend line too. Oh, there's a lot up here, but yeah, you do need to break this if we're going to get, you know, that's your real signal, right? Is breaking that 289.27. Okay. The futures, which we've looked at on S&P futures, you know, kind of got pretty good resistance over here. Didn't get any support today. It was kind of a nothing day, markets wise, S&P wise, but that's your big spot here. So 29, or at least near term, 29.40. It's more like 29.50 now. You get down to there, and if you get below there, then you start to think about maybe this is for real. Until then, not much of an opinion over here. NASDAQ futures, your real level that you need to break is probably 75.15. Again, this is a shift fork from the December low, okay? Have traded on these levels pretty decent, especially over here at the tops in July. And just last week, a couple weeks ago, I guess it was 2 weeks ago at this time, we did find resistance on very near the center, which again was previous support. So we are trading on these, which is why a break of this would be important. And really, it's just a line that connects the June and August lows. Okay. All right. So another month in the books here. As we get into the last 2 trading days of September, I did say that I would take a quick look at IDO real quick. Also need to run some scans. Okay, so we'll go to the currencies, and you can see the top 3: Aussie yen, Aussie dollar. Here's Aussie dollar. So Aussie dollar is over a 1 month, you know, forward look. What is this? Why is it so different? Hold on. Okay, there we go. So overwhelmingly bullish. In fact, 35 pattern matches, 80% positive over a month. The one that's not positive, though, is really bad. That was into October of 08. So you can sort it by, you know, if we do it by summer, you can see the big outlier over here. But most are positive for the Aussie match. You go to Kiwi, these you saw yesterday, right? But pretty positive, you know, suggestions in terms of pattern matching. Euro as well, close to 60% on the positive, with upside, right, much greater than downside. So again, we've got that going for us. We'll see if any of this matters, because things haven't mattered for a very long time. Again, I think it's probably the fact that rates are so low everywhere that there's just no, as I said earlier, no reason for money to move around. All right. Okay, so that is all I've got for my prepared notes. If there is anything that you want me to take a look at before I run, I will be happy to do so. See what highs and lows we have today. Euro dollar and Euro CAD making 50-day lows. All right, I'm wrapping it up here, going once, going twice, and that is it. All right. Thank you all a ton, as always, for being here. I will have this archived later tonight, and I will talk to everyone later. All right, have a great rest of your week. It's only a day left, but have a great rest of your week. All right, bye.